we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets Editor John Dobas. S&P 500 index looked like it was on track for a nice day today, but in the afternoon kind of lost it. Still hanging on to a bullish trend, down about 0.31% today was the SPY, which tracks the S&P 500 index. Classic tale of bullfighting, death in the afternoon, appropriate for stocks. After about 3 o'clock, there was talk of releasing oil reserves, petroleum reserves, and this kind of shot down the energy stocks. Energy stocks are now a pretty big percentage of the overall index. So SPY turned lower after 3 p.m. Death in the afternoon, but still plenty of life. Apple tagging a fresh high today, $616 and $614.50 is where it closed. Yo boy, a new high in Apple, says Flava Flav. He didn't really say that, but if he were around, he would certainly be enthusiastic about Apple. Everyone is. You got to be kind of careful when sentiment gets that crazy, but it still looks like a cheap stock with a 13.8 or 14 times earnings and growing at about 58% a year. So gold was down in the afternoon as well, but hung on to its 200-day moving average. On the verge of bullish and bearish territory right there. Gold still has the bullish case favorably looking upon it. Builders still have the mojo rise in the Case-Shiller home price index showed that home prices actually didn't fall month over month. The first time since last July that they didn't do that. The last time that they rose was April of last year. This helped boost things in the home building sector. XHB is the ETF that tracks that. Also what helped home builders, Lennar came through in a big way, showing that revenue was up 30%. They topped estimates for EPS. They looked ahead pretty well. Deliveries were up 29%. Cancellation rate 18%. You'll recall that KB Home had about twice that when it reported last week. So Lennar was a real upper when KB was a big downer last week, and the stock was up 4.6%. Look at some others in the home building sector that were up a lot today. Ryland and Standard Pacific. Nice gains today, over 4% for both. Look for the strength to continue and hang on to it. One thing that you need to be suspect about a little bit. I read this guy, Jason Gepfer, out in Minnesota, sentiment trader. Great guy. He is tireless. Only when his family begs him to go away from his work will he stop writing. But he puts out this great smart money, dumb money indicator. Right now, the dumb money is 63% confident in a rally, 38% for the smart money. So dumb money is looking for the bullish side. The smart money is kind of looking for a pullback. But even the losers, they get lucky sometimes, saying Tom Petty and the Heartbreakers on the Damn the Torpedoes album. Great one. But here's why we need to be concerned. Check this out. This is the smart money confidence. When it dips below 40% or 0.4 right over here, it tends to be associated with market pullbacks. Over here, we've got, here's 2008 right here, the market crash. We've got some bad indicators, but obviously you got to respect the direction of the market right now, but there could be trouble ahead. One thing I would like to talk about is pessimism and optimism and the overabundance thereof. Gepfer, in his report, also lists individual stocks where pessimism and optimism are kind of peaking out in one way or another. One is for Regis, not Regis Philbin. What? I'm overvalued? Are you crazy? No. Regis, the hair salons place. It's at $18. People are overly pessimistic about it. It gets no respect at all. It's more of a Rodney Dangerfield than a Regis Philbin. PE looks decent, 15.3, right? Then you look at the earnings per share growing at 2.6 a year, revenue down 2%, so maybe there's reason to be pessimistic, who knows? But you can always find opportunities on the contrarian side, so check out RGS. Compare that to Ulta, a real hairdresser on fire, if you pardon the Morrissey expression from the Bona Drag album. 28% EPS growth, 38 PE, revenues are growing 21%. Not very cheap, but look at Ulta, smoking higher from about $60 early this year to about 94 right now. Big gains in Ulta Salon, big momentum stock, but be careful trading it. One bank, FFIN, it's First Financial Bank Shares. It's a Texas commercial bank. I put in here the KRE, which is the KBW Regional Banking ETF. This is a component thereof. In any case, a lot of pessimism right here for FFIN. There's been a big rally in regional banks. You can see how it's really taken off in the last week, but you didn't really see too much of that for FFIN. Check out FFIN. Synopsys, one more name that has a lot of pessimism associated with it. Synopsys does electronic design automation. They have software that lets people design chips. Stock is growing EPS at 11.7% a year. The PE is 15. maybe it's going to grow higher and some people are smart and know a little more. In any case, look around. You find pessimism and optimism in abundance. When you find it in the extreme in either direction, go the other way and you'll usually be right.